One of the things that I've talked to my clients about, because if you realize what's going on in this market, about 45% of homeowners have a paid off mortgage. Rather than sell off the property and get all of the money and have nowhere to invest it, right? If they don't want to be a real estate investor, or they don't want to put in the stock market because they're nervous about where the stock market's going, and actually just did on a property, was having a seller held mortgage. And what that did was they are now acting as the bank. They did take a substantial down payment, because as soon as you go as a seller to your attorney and say, hey, I want to hold a mortgage for a buyer, the first thing you're going to do is tell you all of the negative aspects of it and the risks of being the bank, potentially if you have to foreclose on somebody. What I think is important about that is, A, you're collecting interest on that money so that you're fighting the inflationary pressure, and you're making some money on a monthly basis without having to deal with the maintenance that goes along with holding that property as an owner investor. Banks and the insurance companies are the ones that historically have made all the money. Why? Because through the amortization process, that person, even if they did a 5-year term, are only getting paid a fraction of their principal back in that first 5 years, and a vast majority of that payment is interest. They can actually make a very good return on their money, and in the interim, if they're doing a little bit of a preferable rate, they're actually going to get more on the price of their home because it's more affordable to that buyer.